Welcome to Insights for Business Owners. Uh, this month we have Ben Hofer, founder and CEO of DealMemo, who is the guy you got to go to when you're working on deals. So, Ben, great to have you on.
Yeah, thanks for the invite. Excited to chat.
So, why don't you fill us in a little bit on what you're doing at DealMemo, how you got there, how you got the idea, and how it can be most useful to people.
Yeah, sure. So, Deal Memo, what we do is primarily we provide sell side M&A advisors, business brokers, investment bankers with outsourced sim development services.
Nice.
And this is a critical, component, as you know, of the M&A process because ultimately the sim is the document that most buyers will use to put in an LOI, right?
Yeah.
And then afterwards, they'll get access to more data, and then they can, go from there. But the sim is critical in kind of being the first comprehensive piece of information on a business to help buyers make an assessment on whether to proceed with the acquisition or not. And
Yep.
so we found through our expertise that this was a big pain point in the M&A process for many advisors, and
Mm,
so that's what we're solving.
that's
Is
awesome.
is being that support service at the end of the day for sell side advisors.
And first of all, I think probably most people know, but SIM, right? Confidential information memorandum, kind of, right? But what documents do you review to create that SIM? Like, what are you asking for from the sellers?
Yeah, great question. So what we need is typically to develop. So what goes into a SIM? Let's start with that. It's
Yeah.
a comprehensive view of the business. So products and services, business model, financials, history of the business, why it might be a good acquisition for a certain
Mm,
party, let's say a strategic or a
yeah.
financial buyer or independent buyer. Each of
Yep.
these different buyers will have different motivations in acquiring the business. So
Yeah.
we want to develop a holistic view. So to your point, and what we ask from the seller is we often get on a call with them and the advisor. We
Yep.
go through a variety of questions on the business. We ask the seller, for example, you know, when did you get started? Did you acquire the business or did you establish it? When?
Hmm.
Why? How? You know, what products and services do you offer? Why are these valuable? What are the growth opportunities in the future for a new buyer? So we really go through a nice diagnostic, I would say
Mm,
over an hour and a half to 2 hours, in
wow.
addition to any other information that the seller provides, whether it be financials, whether it be inventory lists, and so on,
Mm.
to then develop this comprehensive document.
I think that's great. I mean, doing mostly buy side work, about 80% buy side, a lot of times it can feel like the Sims are, or the creators of the Sim are playing hide the ball. It sounds like that is not your approach. Like you're actually looking for transparency. You're trying to be as transparent as possible. Is that, probably pretty accurate? Yeah.
That's what we recommend. We want to. It also saves everyone time, right? I mean,
Right. Right.
let's say you present a business in a specific way and you hide some information that you want to keep in the closet. Well, it's going to come out eventually.
It's
It's
going to
going
come
to
out.
come out in due diligence down the road, and it might derail the deal. So wasting everyone's time, right?
Mm.
It's better off putting these things out in the front,
Yep.
maybe at the LOI stage, maybe not in the sim, but right at the LOI stage is also okay.
Yep.
After the LOI, just so all parties are at the same table, on the same page, and
Mm.
understand what's being presented and acquired. The worst thing you can do is put together a one pager
Right.
or like 3 pages on a sim that doesn't really give the buyer anything to go off of, and
Yeah.
then you get a bunch of LOIs, get everyone excited in the process, and then the proverbial shit comes out.
Yeah,
in
yeah,
the
exactly. Exactly. Do you sometimes reject sellers? You're just like, we can't work with this. Like, this is really, not transparent and actually just don't feel comfortable? Or how do you handle those situations?
Yeah, so we're developing Sims as a white label service and primarily for advisors. Sometimes
I see.
we do get sellers that come directly to us.
I see.
In all
Okay, good point.
cases,
Good point.
in all
Yep.
cases, we will advise. We will say,
Yeah.
we advise you to put this information in. We advise you to keep this information in. But
Yeah.
ultimately, it's up to our clients to dictate what to put and what not to put.
I get it. Yeah.
So yeah, our hands are tied sometimes as far as best practices go.
Makes sense. It sounds like the part of the real special sauce, though, is telling a narrative about who would be a good target, a buyer, target buyer, and why. And how do you, create that narrative, and what, like, from your background is sort of helpful for that? I mean, because that's very difficult, I think.
Yeah, it's the way we structure our SIMs. We really like to give a nice holistic view in the executive summary. And
Mm.
once a buyer is interested after going through the executive summary, then it's implied that they will go through the rest of the SIM. And
Yeah.
that's just, in terms of saving time, being most efficient for ultimately
Mm.
our audience is, the buyer, right? The private equity firm, the strategic. So we want to make sure
Yeah.
our SIMs are best crafted to meet their needs at the end of the day.
Mm.
So in our executive summary, we do have a page for investment thesis. We do have a
Mm.
page for deal structure or deal terms, and we do highlight briefly as to why a strategic might be interested or why a private equity group might be interested.
Yep.
I come from a consulting background. Everyone on our
Nice.
team is either a former M&A analyst, consultants, accountants, engineers. So everyone has previous deal experience, and then now
Great.
because all we do is SIMs, everyone has a lot of SIM development experience. So
Awesome.
that background does help us gauge which business would be ideal for private equity group, which business would be ideal for independent
Hmm.
buyer or strategic in a certain
Yeah.
industry. So we have those reps to help with that.
Do you push back on valuation at all ever, or you just sort of take what they give you? Do you say, well, like, I don't know, 10x and, an MSP that seems high or something, or just, you don't really get to do that, or
We don't do evaluations, so we
I see,
get the valuation from the client.
I see.
We've seen atypical processes where a price, like an asking price, will be assigned to a business that might be like a 10 million EBITDA business.
Mhm.
Typically, that's not what we would recommend, but at the end of the day,
Right,
again,
right, right. Yeah, yeah. You're like, EBITDA's 500,000. You're evaluating this like a 10 million EBITDA business. Yeah, yeah, yeah.
that or even slapping an asking price on a business that's, let's say, large is not proper. There should be a proper process run, so you shouldn't anchor to a specific asking price. You should actually just open up and start a
Oh,
bidding
that's a great
process.
point. Oh, tell me about that. Do you encourage that all the time, like not to set an asking price, or?
Of my personal opinion, and
Hmm.
I've also gone through the AM and AA certification process. I'm a SEMA as well, but general market practice and proper process, also in my opinion, is that you always run a process. You don't anchor to a specific asking price.
Wow, that's cool.
Um,
That's
I
good to know. That's
I
good advice.
I like that because it lets the market determine the price.
Mm.
And also for certain buyers, let's say you anchor a business at, I don't know, 10 million. For certain buyers, let's say it's a strategic buyer and they're
Yeah,
looking to acquire this business, the target, in a specific region because they want to aggressively enter that market. And this
yeah,
is the major player in that market.
right.
For that business, that acquirer, 10 million might be really cheap. They might be
Like
willing
low.
to pay
Yeah.
more. Yeah.
Mm.
Whereas, same thing for a private equity group or so on. So
Mm.
anchoring does the business a disservice, at least at the onset.
Hmm.
Definitely, you should have a valuation, and then that valuation is your range. You should go out to market, and you should see what comes in within that range, and then you can go through a second or third round to kind of increase the price from there.
Okay, so you like to set have a valuation range based on EBITDA. Okay, no, that makes sense. Do you encourage sellers to do some sort of sell side QV light just to, yeah,
Yeah, I definitely recommend it. For larger businesses, a full QAV makes a lot of sense, even
yeah,
though many sellers may not want to pay the 20, 30, 40, $50,000 to do it.
right, yeah,
It, in my opinion, is like a defensive tool against any buy side QAV or buy side negotiation tactics that might come forth
Yep.
during negotiation. You can easily defend your valuation then with the sell side QV, saying, "Hey, look, this is our third party. This is what they
Yeah,
valued us at," or they. Plus, when you go to market with a SIM and a sell side QV, that's a very strong package because you
it
already
is.
have
It is.
fully audited like financials that help buyers also the buy side QV also be completed faster.
Yeah, cheaper, faster. And I would add one more thing to that, which is it also can help with pushback on a bank valuation,
Yeah.
as well. Like towards the end, like more on the SBA, smaller deals, because they get a
The,
valuation and sometimes they're really low. And you're like, and actually, we see a lot of sellers having to put more on a seller note because the bank valuation at the end comes in a good bit lower.
that
And at
yeah,
least you, yeah,
that's
yeah,
a great point. That's a great point.
yeah,
The difficulty is, every business, in my opinion, should have a QV, a sell side QV. But for smaller businesses, like a QV light would be great, but
yeah,
sometimes it's still too costly for some business owners.
yeah.
So in my opinion, there's an opportunity there to really develop a nice, cost-effective way to help these sellers kind of verify their financials and then prepare for the market.
Hmm. We mostly hang out in the self-funded searcher, sort of independent sponsor type market. When you're thinking about a business and you're thinking about that market and those type of buyers, how do you, well, what kind of businesses do you think are a good fit for, the self-funded searchers versus PE strategics?
Yeah, so from what we see, it's anything below, I would say, a million EBITDA or
Hmm.
less. So
Yeah,
that would be prime independent searcher territory.
yeah, yeah, yeah,
Any search funds that are able to raise more capital, then obviously should play, in my opinion, between the 1 and 3 million EBITDA range. And then 3
yep,
million plus is where you start getting to competition with private equity and strategic firms
yeah. Makes sense. Makes sense.
who need to deploy capital, so they are willing to overpay for a
Right,
lot of businesses. So it's
right.
very difficult to compete there.
Yeah,
Million and below in EBITDA is a great area to be in because
yeah,
you just acquire those businesses, you add, let's say 1 million or a 500,000 in EBITDA, you're already in a nice
yeah.
add-on territory for a private equity firm,
Right,
for a platform.
right.
So right away, you're let's say it takes you a year or two, and that's a little bit aggressive, but
Yeah,
that's adding value to the overall ecosystem, and you can still exit at a really nice multiple. So if I were
yeah.
to go through the acquisition strategy as an independent sponsor, I would target anything below a million EBITDA. I would
Yep.
immediately try to grow it as fast as possible to above a million EBITDA and then exit.
Flip it. Yeah, yeah, absolutely. Where do you've got your finger on the pulse of the market. Where do you see the state of the market now? And where do you see it going?
Great question. Great question. So earlier this year, I would say at the beginning of the year, it was going well.
Yeah,
I think a lot of people were excited about a kind of an increase in overall profitability for many businesses. Then we
yeah,
saw tariffs come in around
right.
April, and for about 2 weeks, the consensus we got from our clients was there's a little bit of uncertainty.
Yeah.
People are a little bit afraid. At least on the sell side, some of them are unsure of of to sell now, especially those exposed to tariffs,
Mm-hmm.
and then
Mm-hmm.
some of them are more encouraged to sell now because they want to get in front of any
Right.
potential issues that tariffs would cause. But then
100%.
the tariff situation kind of fizzled out and settled, and now
Yep.
we are seeing more businesses come to market,
Yeah.
especially those that are not subject to tariffs. So
Right.
those will naturally garner more premium valuations. Trucking and
Yes.
logistics is,
Yes.
from what we see, is unfortunately not doing too well.
Yes.
A lot of those companies are coming to market, and they're a bit difficult to sell. So, that's just what we see. As far as the future, I
Yeah.
think we're going to see more businesses come to market, probably more distressed situations than
Yeah.
one would like to see.
Absolutely.
just because of the economy, and then those that are exposed to tariffs or in the logistics industry might be even more distressed.
No, good point. And we were actually gonna just focus on DealMemo, what you're doing there, but you're doing so many cool things, and I'm interested in
Indeed.
distressed assets myself, and I know you are as well. Tell me if you can a little bit about your interest there and what you're doing over there.
Yeah, the distress space, as a close friend and semi mentor to me, said, is kind of like the underworld of M&A. And
Yeah,
so,
yeah,
yeah, it's there's a reason why distressed investors are called vulture investors.
right, 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 right.
Right. And so I like the space just because of the ambiguity, the
Yeah,
the kind of, so many unique situations, but so many great businesses that are just poorly executed or run,
right,
or
right,
just due to market
right.
situations. So in
Yeah,
that space, we are building a marketplace and a
cool.
platform, beyond just a marketplace, to help distressed businesses not only sell, but also help buyers who are interested in distressed businesses find and acquire such businesses with ease.
Yeah,
Instead of going through the traditional broker model, these businesses would be positioned to sell rather quickly, so buyers and sellers can communicate directly, as well
yeah,
as helping distressed sellers find the advisors they need with ease. Um,
yeah,
because when you're in a distressed situation, the last thing you want to do is find look through Google or try to find somebody that you don't know who's vetted and
right,
whatnot.
right.
So we're building that as well to help distressed business owners really find the advisor, whether it's a lawyer,
Yeah.
whether it's a consultant or an appraiser and such, to help their situation as fast as possible.
I think it's a super cool idea. It's and such a big need. Having done a lot of workout work, immediately my mind goes to, the collateral and, the security agreements and, who's in first position, et cetera. How are you planning to kind of, deal with those issues? Because I imagine a lot of the collateral is like over leveraged, and so you're literally dealing with giving all these lenders a haircut to get anything, and that's a tricky and time consuming process. I don't know. What are your thoughts on that? Or
Yeah, that's one thing about the distress world that is makes it more complex than a straightforward,
yeah,
acquisition of a, let's say, healthy business. The issue is there. Let's say the business is over leveraged. There's a lot more debt than cash flow, and then
yeah,
basically a lot of creditors are after their position, right? Especially if it's a bankruptcy. If it's been
yeah,
filed, then everyone gets in line. There's a predetermined line, and then
right,
the opportunities for a buyer in that space are either acquire the assets
yep,
after liquidation, or or a closure, or acquire the business. If it's, let's say, it's going through Chapter 11, you can still kind of acquire the business
yep.
along with its assets, its team, and so on, and just turn it around.
Once they've sort
So,
of wiped the debt, yeah, yeah, yeah.
or you acquire it and you negotiate the debt.
I get it. Yeah, yeah, and that's real Wild West. Like, yeah, yeah, yeah.
There's
Gunslinger
there
stuff.
That's my favorite, I think, area that I would play in,
Yeah.
because
Oh, really? Okay.
you can,
Stalking horse bids.
yeah,
Yeah,
because
yeah,
you can aggressively, at that
mhm,
point when you're negotiating with creditors, you have to be kind of human in that sense. Everyone's human, right? So you're appealing to
yeah,
humans, and you can bring down that owed amount, the total owed amount amongst all the creditors, by just strategic negotiation,
sure.
which then lowers your overall acquisition cost as well.
Oh, yeah,
So there's a lot of
yeah,
opportunity there.
yeah. I mean, I guess I don't know if you'll be doing the Sims for these people, probably. I mean, that's its own animal. Like, are you able to convince the sellers, like, hey, you're going to get 10 cents on the dollar, you're going to get 20 cents, like, kind of helping them be realistic, or
Yeah, I mean, when in a distress situation, I think most sellers are just, they understand the urgency of the situation, and
yeah,
so if we are in an advisory capacity, so the way we will set up the platform is, if the seller wants advisory services from us, they can add that on and pay extra for it.
yeah,
Otherwise, we won't do that. they can
Yep.
just directly negotiate with the buyer.
Yeah,
Um,
yeah.
but in a sim situation, it's pretty much the same. It's presenting the business. There's going to be a lot more emphasis on future potential, turnaround potential, per
Mm,
se, unless it's a
yeah.
straight liquidation where it's just a list of assets and you're saying, okay, this is what the asset value is and what you're acquiring. Unless you try to put a value to like talent that might stay with the business or
Mm,
IP if there
mm.
there's some unique IP.
Anecdotally, too, I'm seeing an uptick in bankruptcies, um, and like longer payment terms from, on accounts receivable for clients. And like, are you getting that sense that we'll be seeing, more distressed asset deals coming? Just kind of it's cyclical. It's an economic cycle issue.
Yeah, if we're talking about the greater economy, I personally
Yeah,
think we're going to experience some kind of recessionary period at least
yeah,
soon.
yeah,
And then you'll have an uptick even more so than now in bankruptcies. I mean, we're already seeing increased
yeah.
bankruptcies,
Oh, we are.
but we will see more, especially due to the fact that loans during the COVID period
Yeah,
are coming to maturity
yeah.
in many cases. And so whether those loans can be paid back or not is also a big question,
Right.
which might contribute to bankruptcy, further bankruptcies.
Yeah, I agree. A lot of those idle loans, economic injury disaster loans, are suddenly payments are starting, and people were took out a ton of money on that. I think they sort of thought it would be like the PPP loans, and they would never have to pay it.
Yeah.
And it's like the tide is going out now, and it's suddenly, yeah. I think there's a lot of we're just seeing it anecdotally, a lot of
Like,
factors.
especially if you, let's say you had a logistics business and then you took out a loan against, all of your assets,
Yeah, yeah,
or you acquired more assets during the
yeah,
2022-23 period, let's say, or earlier with your loan, and then
yeah,
now you're having a real dry run in the logistics space. Like
yeah.
it's tough.
It's tough. Yeah, no, we have some trucking logistic clients and deals, and that's been definitely a hard hit area.
Yeah.
Ben, this has been so insightful. Thank you so much. How do folks find you for Deal Memo and then the distressed asset platform as well?
Yeah, no, first of all, thank you for the invite. I mean, this has been a wonderful chat, and
Yeah,
people can find us at dealmemo.com.
nice.
The platform that we're developing is called Urgent Exits, so urgentexits.com. We have
Great.
a waiting list, and we're going to launch actually quite soon, hopefully in the next 2 weeks to 3 weeks.
Awesome.
And then you can find me on X. I'm Sim Builder, that's CIM Builder.
Oh, yeah, nice.
Yep, and then on LinkedIn, just Ben Hofer as well, or Hofer.
Thank you again. Really appreciate your time.
Awesome. Thanks, Dave.